Hello everyone, welcome to this week's live stream. Just to explain how this works, we do this every Friday at 2:30, and it's a quick catch up with what's been happening in the markets and a look ahead to next week. I thought we'd kick things off with the oil chart. We'll come back to that in a second. First of all, let's just get some of the formalities out of the way. So the way it works is I'll talk quickly about some of the major news events for next week. We'll jump onto the platform, we'll look at the major markets, then we'll jump into the questions. If there's any stuff you want looking at, put it in the chat and I'll take a look at it when we've been through the major stuff. Quick risk warning, this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. So good afternoon everybody. Another crazy week, but we'll come to that in a second. Let's just do stuff for next week. It's a bit of a quiet week next week. We're probably due a quiet week, I think, after some of the excitement. We had payrolls, of course, an hour ago. The market was expecting about 150,000 jobs to be added to the US economy, and the number came in at 467,000. So we've seen some big movements over the last hour. We'll have a look at those in a second. So next Thursday, US inflation. So I think that's a big one. Clearly, inflation is the topic of the moment. We saw the Bank of England raise interest rates this week as expected. So central banks are taking action to try and put a lid on inflation. A bit late, some would say. I would definitely say that. So I think the central banks might be playing catch up all year, or at least the first few months of the year with inflation. But anyway, US inflation numbers out next week. I think the last one we had, wasn't it the biggest rise in about 40 years, something like that. So that'll be an interesting number. And then next Friday, UK GDP. So how well or not is the UK economy doing? So we'll see. So that's two of the major things to watch next week. A quick reminder of where to go for more information. So I do this with Capital.com. Go to Capital.com, the website, download the app, open an account, open a demo account, all the usual stuff. Any questions after this, drop me an email, david.jones@capital.com. On Twitter, I'm at JonesTheMarkets, and go to jonesthemarkets.com to find out more about the trading course I run. And of course, follow Capital.com on YouTube, Twitter, and Facebook. So we put videos up regularly on our YouTube channel. You're watching now. You're probably subscribed anyway, but if you're not, click on subscribe. Right, I think the video we did yesterday was oil. And I am amazed by the oil price. I thought we'd start things off with oil, looking at our major markets. So here we are, nearly $91 a barrel for oil. So back to where it was, are we still October 2014? Just about October 2014 levels. In the video yesterday, I've got a couple of trades running on oil on this account and also in my own account as well. So I'm quite happy, even though I don't believe how strong it is. So a couple of trades running on oil. I think in the video yesterday, I put an order in, and you can watch that video on the channel. I put an order in to try and buy at 83, and clearly the market has just soared away again. So here we are. I mean, it has been phenomenal the last couple of years for oil, slightly less than a couple of years. You know, back in April 2020, the market was down at $10, $11. Famously, the May contract went negative, and here we are at 91. And it's a market, it shows no signs of stopping at the moment. I think Goldman Sachs are forecasting $100 a barrel for the second half of 2022. It does feel like everybody is too bullish on oil at the moment and just seems to be taking for granted that it's going to hit $100. But you can't argue with the trend either. You know, if we pick up on the big trend from the lows, from those 2020 lows, and then we pick up on the move since December, if we flip this over to an hourly, you know, for me, I clearly still be a buyer of dips because the trend is up. You know, we had all this sideways stuff going on from late Jan into yesterday, really, where the market was pretty well supported by sort of $85.5, $86 a barrel. Couldn't really make much progress through 88, and then we saw the move last night, 6 o'clock last night. The market breaks out through 88, and here we are at 91. What can you do? The trend is up. So for me, still be a buyer on dips. You know, only if the market, for me, probably the level to watch is about 81, 82. If it did fall back below there, then perhaps this trend is in trouble. But of course, you know, going back, we know that most people lose when trading. Look at this. You can see on the right hand side, market sentiment. So out of our clients who have a trade on oil, 51% are short. So the majority of people are trying to call the top. You know, so there's at least 51% who are the wrong side of this market. And you often see that in strong trending markets. If you have access to this sort of sentiment data, you'll see that most people are the wrong side of the move. And that's definitely the case in oil. So for me, you know, I'm happy to stay long oil. I do think it's a bit ridiculous that we're up here. But what can you do? You can't argue with the market. You know, what's it done this year? When I did the video yesterday, it was up 15% for the year. It closed last year at $75. Oh, it's up 20% now, isn't it? So oil's up about 20%, and it's all going up for the year to date. So great trend. Can't argue with that. Perhaps we'll see $100 sooner rather than later. I mean, I'd still be a buyer of dips. Natural gas. This has had a crazy couple of weeks. The natural gas price. Again, I've got a couple of trades running in this account from videos we did. There we go. So from the 13th of December and the 19th of Jan. I wonder if we did that on a live stream actually, because we did it at 3 o'clock in the afternoon. So maybe that was a live stream trade. But natural gas, I think it's been really interesting. We've had this cold front in America that has pushed up perceived demand for heating and everything else. And we've seen that the price of natural gas, January the 20th, it was $3.67. A couple of days ago, it was $5.30. You know, it is, so it's a 50% move nearly, isn't it? Not far off a 50% move in natural gas. I mean, it is nuts as a market, but I think it was a good opportunity. You know, I bought in because we had this trend from last year, did a great job last year, this trend. Well, actually, that's from 2020. So again, last year, you know, we saw the trend continue. The market did go completely nuts into October of last year, sold off, but held above the old support at 350 from last summer, and it held above the trend line, and the market's picked up again. So, I mean, perhaps it's a bit overdone in the short term. If I wasn't in already, I don't know if I'd want to be a buyer up here. But for me, you know, as with oil, if it gets knocked back, it still looks to be a buying opportunity. So let's see what happens. Now let's take a look at gold and silver. Then we'll look at stock markets. I think gold and silver still a bit boring, but that trend in gold is still up. You know, so for me, the trend from the summer of last year is still up. I think we did a video last week on gold, and I said, I think we recorded the video here, and as soon as it went out, the price of gold dropped about $40. But I think I said back then, you know, anything below 1800 looks to be a good opportunity to buy in this trend. And it's still the same. It's not the most exciting market in the world by any stretch at the moment, but the trend for gold is still up. I'd still be happy to be a buyer on any weakness. I wouldn't be holding my breath waiting for $2,000 plus anytime soon, but that trend on gold is still going, so that's all okay. So sort of plodding along. Silver, again, silver is can be much more volatile than gold. If I had to do a trade on silver, I'd be a buyer. It's gone nowhere for the last pretty much 18 months now, 16 months anyway. We've gone sideways, but it's well underpinned by $21.50 or thereabouts. So I'd still be a buyer on dips for silver. It just can't build any sort of sustainable trend, silver. So I think it's interesting, gold and silver, because we all know inflation is a big issue. I think gold and silver fans, may well have come into this year thinking, oh, this will be our year. This will be the year that these markets go nuts. And they're not, So I think it could be another disappointing year for gold and silver, to be honest, because we're not seeing them moving as we might expect them to move, given the current economic backdrop. So there you go. Gold and silver still a bit dull. Let's take a look. Let's take a look at some currencies. Then we'll do stock markets. I think the pounds. I'm quite tempted to. Maybe this is the trade I'm going to do. Actually, we'll do a trade on the pound in a minute. So this is pound against the dollar. So I would argue that the big trend is still down from June of last year. The big trend is still down. It sort of had a little look out in January through that trend line, and it's had another look up. So arguably, from a medium-term point of view, perhaps the sensible thing to do is be a seller of the pound. I think perhaps there are arguments for being short, medium-term from this level, and long, short-term from this level. And I'll show you what I mean. If I flip this over to an hourly chart, I was watching this just before I started today, because I have traded it a bit this week. I've traded it twice this week. I went short, I got stopped out, I reversed it and I went long, and I caught a chunk of the move up, came out of it, had no trade on, and I saw today it got knocked on the payrolls. So this is between 1 and 2 today, it got knocked. But we haven't really seen any follow through. So I did think, when I finished doing this, I thought I might be a buyer of the pound, see where it is. And that might be the trade I do, because I think in the short term at least, for the last week or so, the trend has been up. So maybe there's a trade here to be a buyer. Maybe that the weakness over the payrolls has been overdone to be a buyer and put a stop loss. Perhaps, I don't know, 134.60. Let's do that trade. So from a short term point of view, perhaps there's a little trade to do here. Let's do that to see if it's going to just have another look at those highs we saw after the Bank of England raised interest rates. So let's do that trade. So there we go. So I'm going to buy 20,000 at 135.35 with a stop at 134.60. So give it a bit of room and see if it can crawl its way back up. Let's do that trade. There we go. Let's see how that works out. But I think perhaps, as we often get over payrolls, we can get some nutty moves. Perhaps the market's overdone that move. But from a daily point of view, I still think that I'd probably rather sell into strength than buy into weakness. Let's see what happens. So I'd rather be a seller than a buyer. And if you look at euro sterling, Euro US dollar has had a really big run. Look at him in the last if you zoom in, since the end of Jan, so January the 28th, the market was 111.50. And it's at 114.40. So we've seen a 300-point run in Euro US dollar. So it has completely clawed back its losses from the highs in January. And actually, for me, this is probably the perfect place to go short. Because if we went short here, we've got an obvious level to put stops above 115. So actually, I think that's a good medium-term short up here. I think if it starts trading through 115, I'd start to change my mind. So this will be an interesting one to come back next week to see how it gets on up here. If it breaks through 115, perhaps we do have the first start of a trend reversal in Euro US dollar. But for now, if I had to do a trade, I'd be short. So we'll see how it turns out. I can see a few people have mentioned Euro sterling in the chat. So while we're on the subject of the euro, let's take a look at Euro sterling. I traded this last year and lost money. I thought it was gonna rally but it didn't. And I think I got stopped out in November in the end, or maybe earlier this year. I'd still be inclined to be a seller on strength of euro sterling. It only yesterday, the euro against the pound traded to its lowest levels since February 2020. Oh, actually, but then you could use the argument, and I would use the argument, this was a major turning point for euro sterling, wasn't it? So that is quite interesting, actually. Let me just roll back slightly on my opinion that I'd be a seller. It's interesting that it yesterday almost to the exact same level we saw it hit December 2019 and Feb 2020, and the market spiked off it. I'd still be tempted to sell it though, because I think maybe we'll go back and have another look like we did back then. So for me, I'd be waiting for a bit of weakness to be a seller. You could also argue, and I would argue, that the trend, looks, I don't know, something like that. It's a bit not the best downtrend in the world, but for me, I'd be waiting for it to run out of steam and sell it again. But it is interesting down here. Maybe this is going to be a much more interesting year for the euro. We've seen it maybe starting to reverse against the dollar and hitting this major level euro sterling, and that is a massive level. I don't think we've seen the bottom just yet. That's what I'd say. So I'd still be tempted to be a seller. It's quite rare that markets make handbrake turns and hit a level and suddenly off we go to the races again. So I think it could come under some pressure. So I'd be looking to be a seller early next week on euro sterling. Let's see how it works out. But that's certainly an interesting level. So maybe I have to start paying a bit more attention to euro sterling from here. So there's the major currencies. Dollar index. I do think I've read a lot of stuff actually about this being the year the dollar crashes. There seems to be something of a theme. I don't know if it's a YouTube theme or just a nutty Twitter theme. I don't see it. I would absolutely be looking next week to be a buyer of the dollar index. Personally, I mean, clearly nothing today is financial advice and no one's got a crystal ball. But for me, we've had this trend in the dollar. So the dollar index, if you're not familiar with it, it's the dollar against a basket of other currencies. We've had this trend in the dollar since May of last year. So we're 9 months into the trend. The market, only a week or so ago, the dollar index hit its best levels since July 2020. So we saw an 18-month high for the dollar index. The market has got knocked back, but so what? The trend is still up. I actually need to move my trend line to just before the highs. The trend is still up. So for me, that is a textbook buy the dip. Not today, because it's only just started turning around today. But I think that's a really interesting market to watch next week. And I would absolutely be a buyer of the dollar index. First target for me would be a run back up to those highs, about 97.40, and maybe 98 as a more slightly more ambitious target. But for me, that trend is still up. It would take, it's only if it starts slipping below around 94.5, so another 100 points below where we are now, would I start to think it was in trouble. But for me, it still looks like a buy the dips, the old dollar index. Let's have a look at the crazy world of crypto. I still think, I still quite fancy Bitcoin to make a base down here. Clearly it's halved, or it had halved from those highs in November. We had these big levels from Jan 2021, the summer of last year, at 28,000 to 28 to, 37 or thereabouts was a big level. So I think if the trend is going to change anywhere, then we're here. So for me, this is another one for me to keep on watching and see if we can try and shake off this weakness. Once again, I wouldn't necessarily be in a hurry to buy just yet, but I do think it's one that perhaps, famous last words, there's not that much more downside left from here. Let's see what happens. So it's an interesting one to watch and see if we get a bit of a turn in thingamajiggy Bitcoin. Same for Ethereum. That trend for Ethereum has come under a bit of pressure. But there's a lot of support a lot lower down. The trend from the highs is still down. So it's another one for me to keep an eye on and see if we get a bit of a reversal here. So, ones to watch, I think both of those for me. Now, stock markets. What a week. Again, it's been. We've seen a really strong recovery off the S&P. But let's start with the S&P, the broader market index. And if I was to draw my trend line on the S&P, I'd take it off this April low after the sort of the first wave or the first panic we saw because of Corona in 2020. Then it did that, and it sort of did that, and we've fallen out. So, but for me, I'm still undecided for my own trading. Is this trend absolutely, definitely over, or has the market overreacted? And I don't know. So at the moment, from a trading point of view, I don't have any positions on the S&P or the Nasdaq in my own account. So for me, I'm quite happy to sit things out for a little bit and see what happens. I think we've seen it hit quite heavily over the last couple of days, the S&P, and I think the test will be if the market sells off towards that late January low at 4,200 and breaks below it, then I think it looks like we're starting a bear market for stocks. So for me, that's the level I'm watching. If it sells off a bit and we see buyers come back in, then I'd buy the dip. So for me, I am still, if you watched any of these things over the last couple of years, I was really bullish on the way up because the trend was up. But there comes a time, for me anyway, where you think, well, actually, I don't know. So if I don't know, I'm not going to do anything. So I think it's for me, it's still a bit of a wait and see market, the S&P 500, and clearly that's going to dictate a lot for other markets as well. This was that low in January the 24th, a week last Monday. We saw quite a rangy market then for a few days, and then we've seen this run up from this week into Wednesday, and we've seen the market come off again. So I think, which I think is interesting. So for me, the interesting thing is what happens if the market pushes a bit lower. So I'm quite happy just to sit things out really on the S&P at the moment and see how this thing resolves itself. If you look at the Nasdaq, it's going to be a similar sort of thing for the Nasdaq. Again, we saw, that was, a pretty punishing slide in Jan. The Nasdaq ended last year at 16,300 and traded down to 13,750. So lost 2,700 points. So about, more than 15%, 17%, something like that, by that low in January. And it's another one. So for me, the absolute, I don't think, it looks perhaps a bit more bearish than the S&P. The low was 13,700 in January. We're at 14,500 now. Let's see what happens if the market gets back to this 13,750, 14,000 level. So let's see what happens down here. So I'm quite happy again just to wait it out and see where we go next. But weak over the last couple of days again. FTSE 100 has held up a bit better if we bring things to the UK, because again, it's not so much skewed towards growth stocks, that have done really well. The Teslas, the Facebooks, the Netflixes of the world. FTSE 100 oil stocks clearly make up a portion of the FTSE. They've done all right, as we know. Some of the more classic defensives like utilities. So the FTSE, has pushed back or got pretty close to the highs we saw early in January. So the FTSE has held up better. Lagged on the way up, lagged quite significantly on the way up against the likes of the S&P, definitely against the Nasdaq. Hasn't been hit as hard on the way back down because it's not as exposed to some of the, what you'd say is probably higher risk stocks. So the FTSE still looks to be a buy the dips market for me at the moment. It'd be interesting if it does get dragged back down with the S&P and the Nasdaq, but not looking a little bit healthier, I think, the FTSE. And the DAX is interesting. The DAX has been doing its own thing for sort of 6 months or so. But because again, I think the DAX, I'm not up to speed, I must admit, on the DAX and the components that make up the DAX. But I think there's definitely more tech in there than there is in the FTSE, for example. So again, a bit more volatility in the DAX. Massive level. 14,800, going back to May last year, October last year, and again in Jan. 14.8 really held the market up. So if you absolutely wanted to buy the DAX, it'd be interesting to see what happens next week and see if it holds above 14.8 down here, because it has been such a floor. But I think so much of this is going to be dictated by what happens in US markets. And the Nikkei, let's look at the Nikkei, which is another one that completely does its own thing, the Nikkei. And again, pretty sideways over the last 12 months, the Nikkei. I suppose if you thought the sell-off in stocks was overdone and you wanted to trade the Nikkei, an aggressive trade for the Nikkei is to be a buyer and put a stop below that low, the 26,000 low. It's not one I do myself, to be honest. I just think it's been a bit of a strange market over the last year. The Nikkei, it did do well for a bit from the March 2020 lows into Feb 2021, then pretty sideways since then. And we did see it in January briefly at its worst levels since November 2020. So just a bit of a non-committal market, I think, for me, the Nikkei. So for me, the markets I still continue to watch. S&P, just to see how does this thing resolve itself. What's it doing now? I think we've seen a bit of volatility today. These are hourly candles. You can see the swings. It's not sure. It's not sure whether it's should be going up or should be going down over the last 4 hours. Quite a tricky one to call. A little bit messy after the payrolls. If we look at the reaction to the payrolls, I'm guessing it's that candle there. There we go. Big sell off there. Pushes a bit lower, bounces back. It's all a bit all over the place today. So for me, it's just interesting to see how is this market going to perform if we do push back to those lows. I think we did a trade last week on the S&P. Was it last week? No, it must have been for a recording that we did, and I bought it at 43.53. I should really have moved the stop up. This is the problem in this account for these videos. I always forget to check the stops. So I should have moved the stop up, because that ended up being a really good entry point in the end. So it's still in profit. But it was the week before last, I think, at 43.53. So bought about here, which ended up being a pretty good call, and should really have dragged the stop up. I'll leave it run and see how it performs from here. But for me, it's all about the retest. What does the retest look like? But let's see. Right, what we're going to do now is jump into your questions. Before we do that, let's do a quick recap of the contacts. So to find out more, go to Capital.com. Any questions, drop me an email, david.jones@capital.com. Follow me on Twitter @JonesTheMarkets and jonesthemarkets.com to find out about the training course and sort of one-on-one training I do. Follow Capital.com on YouTube, Twitter and Facebook. Right, let's jump into some of the questions. Hold on a sec. Meta, of course. Facebook, I mean, Meta Platforms is the old Facebook. I mean, what a couple of days. I mean, it lost 30% of its value from Wednesday's close to Thursday's close, and it's still going down. I think I read that, was it Mark Zuckerberg suffered, I think it's the biggest personal loss in the shortest period of time. I think he lost $13 billion in a day because of his Facebook holding. He's still worth 90 billion, so I don't think we have to do a GoFundMe page for him. I think he'd be all right. But I mean, just crazy. I think because for the first time they've seen. I haven't read the news about it, but was it a slowdown in users for the first time ever? Which clearly affects their advertising and everything else. But I'd often think when we see moves like this, I often think it's overdone and it's actually an opportunity to be a buyer. But so far, not in this example, because these are daily charts and it's still going down. It had been in this trend from, again, this is from the March 2020 lows, fell out of the trend. If I'd have trading it, I would have hopefully been stopped out before things went absolutely nuts. And here we are in Facebook at its worst levels since July 2020. So we're at an 18-month low in Facebook, or Meta, as they're known as now. For me, I'd still be looking to be a buyer, I must admit, because I do think, is the market just knee-jerking and overdone? But I wouldn't want to go short now because we've seen it come so far in a relatively short period of time. The thing has dropped 30% in 2 days. So where's your stop going to go? How much further is it going to fall in the short term? Are we going to see a bit of a rally that perhaps knocks you out if you're short? So for me, it's a sit on my hands and do nothing. You know, we did see the price of Meta, have some important bases on the way up from around $200 through to about $220. So for me, it's interesting if it continues to nudge lower, and do we see a bit of strength come back in to this one. But it's definitely not one I'd do anything with at the moment for now. Copper. Let's have a look at copper. I think copper is still boring, isn't it? Yep, still boring. Still boring. I did say, I think last week, I do have a trade on copper. And I think it is probably one of my longest running trades. And it's just not going anywhere. You know, the trend had been up. It was a great market in 2020 through to actually the summer of 2021. It was a good market. It's gone nowhere now. It's just, I often complain that gold and silver are boring. Copper is boring at the moment. I mean, someone said, where would you put your stop? Well, I think it depends on your time frame, doesn't it? My stop is probably at 420, but the thing is going nowhere. So what do? It's just a dull market. Copper, no trend, sideways for 8 months now. Very hard to get excited about copper. Do you use continuous charts or contract-specific charts? Good question. I use, when I'm looking at the trend of the market, I look at a continuous chart. So if I'm looking at oil, I look at the cash price of oil, for example. And then if I'm looking to place a trade, and I'm going to place a trade on, it's off again, oil, up again. And if I'm looking to place a trade on the futures contract, let's say crude oil April, I'd look at the crude oil April contract to understand where my stop should go. So as a general rule of thumb, look at continuous charts to get a feel, and look at the cash chart wherever possible to get a feel for the longer term trend in the market, and then look at the contract specific one for where to place the stop. So that was a good one. So we've seen, again, while we've been doing this now, oil has moved out, once more to fresh 7-year highs. It's absolutely nuts, isn't it? That's not going to help inflation, of course, at all. The price of oil continues to go up. Let's see. How about US dollar? Time to buy the dip. Yeah, we did that, didn't we? We looked at the dollar index. I do think, for me, this is my sort of favourite market to keep an eye on at the moment, because I do wonder, are we going to see the next move higher in the dollar index? So, definitely one to watch for next week. Euro, Hungarian forint. We've looked at this a few times, haven't we? So for me, because I remember those dodgy prices. I mean, we've seen it, hold at sort of 342.5. So for me, an aggressive trade would be to think about being a buyer next week if it shows some signs of stability. So again, I wouldn't be doing anything today because it's still weak, but we have seen such a floor for euro against the Hungarian forint that I'd still be looking to be a buyer if it dropped much from here. Dollar Swiss, I'm guessing that dollar Swiss chart is going to look not a million miles different to the dollar index chart. There we go. So dollar Swiss, again, for me, that trend is still up, from January of last year. So we are, what's that, a year into that? Okay, I had a little wobble below it. That would have been a good trade, actually, for me in there. For me, I'd still be a buyer on dips. Arguably a buyer today. The closest I'd have my stop would probably be down at 90.50. That's where I put my stop. But that trend on dollar against the Swiss franc, to me, still looks up. Win, is that the casinos, isn't it? Is it casinos? Win Resorts, yeah, destination casinos. That looks a little bit boring to me. I mean, what do you think? I mean, it's just been... I suppose, like, from a trading buy, we're looking at the last 5 months or so now. I suppose a trading buy, it's a buy on weakness, isn't it? Because we've seen $75 to $77.50 be support. So for me, just a bit... I suppose would you say the trend is still down? I suppose you could say the trend is still down from sort of March last year, but it just looks a little bit It's done well, actually, considering how bad stock markets have done this year. It has at least held up pretty well, Win. So, but it's the sort of thing that if I saw that as a chart, I'd flip past it and go and look at something else. It doesn't do much for me, that one. But, you know, there's an argument for being a buyer with a stop the other side of 75 and just sort of trading that range. Orpea. What is Orpea? I've never heard of that. ORPEA. Well, there we go. Down 13% today. Ouch. Leading European dependency care provider, manages retirement homes, psychiatric clinics and rehabilitation centres. Well, that looks like... I'd have to... Oh, God, that looks horrible, doesn't it? It's lost, what, about... It's more than halved, doesn't it, since the beginning of the year. So for me, it's more than halved. Absolutely no interest in being a buyer. And if I was trying to go short, don't even know where would you put your stop loss. So for me, if you were thinking about it from a buying opportunity, it's not one for me. I've got no interest in trying to catch falling knives, you know, and it just looks really weak to me. Well, it does look weak, doesn't it? I mean, the thing's gone from 90 to 33, you know, so for me, no interest. I mean, it was pretty boring before then, wasn't it? It was stuck in this massive sideways range. Clearly, something has gone wrong in the last couple of weeks for the stock to get hit so hard. But yeah, not one for me, that one. Orpea still looks pretty weak. You know, still pushing to new lows for the day today, that one. We looked at oil and natural gas. We looked at those in the beginning. I think Ford is a good buy Ford. Didn't they get hit this week? Wasn't their stock price hit? Let's have a look. I remember reading something that they'd taken a bit of a hit. Yeah, I can't remember what it was. I mean, was it earnings? Maybe it was earnings. Lots of earnings at the moment, isn't there? I mean, I would still, you know, for me, the big trend on Ford is up. They've done, I think they've got a real lift, haven't they? Because of what they're doing with electric cars, with the Ford, what's it called? The Ford Mustang E and all of that sort of stuff. You know, their stock has done really well over the last couple of years. You know, it's gone from below $5 to $26 earlier this year. So for me, it's a buy the dip. It's just wait for it to stop dipping. It would be my approach. You know, we've got that trend that's done a great job, this trend, coming in around $13.50. So still a way below where we are now. But for me, it's a buy the dip stock, assuming it stops going down. So another one to add to the list, the long list of things to watch at the moment. Intel. Let's have a look at those. It just looks a bit boring, doesn't it? Yeah, because you did say a bit sideways. Yeah, I suppose, again, if you really wanted to trade the range on Intel, you know, be a buyer, you know, whenever Intel dips to, you know, 42 to 44, it doesn't stay down there very long. It's currently 47.60. So again, if you really wanted to trade the range on Intel, yeah, you know, there's an argument for being a buyer down here, isn't there? And whether you have your stop at 45, the other side of the lows for January, or a bit wider out. I must admit, the sideways stuff never appeals to me. But you know, there's an argument definitely for being a buyer of weakness in Intel. So, yeah. Canadian dollar against the Japanese yen. I don't think we've looked at that one before, have we? Oh, actually, we have, because there's a trend line on it, so we must have. Nice trend, Canadian dollar, Japanese yen. So, bit sideways again, isn't it? Little bit, just not doing very much at the moment. So for me, I'd much rather see a sell-off and try and buy the sell-off. It's a bit uneventful. So if we saw a bit of a sell-off, maybe down towards 88 from where we are now, I think that makes it interesting because we have these old lows at 87.30. So it makes it an interesting trade. So it's a bit of a sit on my hands and do nothing at the moment. Disney. Let's have a look at Disney. Off. So Disney has broken that trend line, and that is a proper break now, isn't it, Disney? You know, it broke. I'd often give things one last chance, but it's broken again. So for me, I would say, you know, that the risk is at the moment that we're in a downtrend now in Disney, wherever you draw the trend line from, something like that. So for me, I'd much rather sell short on strength for Disney than be a buyer on dips. So for me, that if I had to trade it, I'd be looking to be a seller. So, and I'd want my stop probably above 160. So I'd rather have a rally and try and get short into a rally from here on Disney, because I think we have seen quite a bit of a shift in sentiment. It peaked in March 2021, so it ran out of steam before the broader market, Disney, and it has sort of rolled over, hasn't it, since then. So for me, I'd be a seller into strength on Disney. BP, let's have a look at BP. I'm guessing BP are doing okay at the moment, considering the price of oil. BP in pounds, let's look at that, up 4% today. Yeah, there it goes. It's interesting. It's broken out, BP. I mean, clearly, it's oil price is playing its part here, isn't it? But broken out through there. Again, it'd be a buyer of dips, as there would be with oil for BP. If we got it, if it dipped back 50p from where it is now, I mean that's still be a 12% move. It still looks like a buying opportunity, but the trend is up, isn't it? I must admit, I've been watching Shell for about a year and I haven't bought them for my ISA, and they've just been going up and up, haven't they, Shell? So clearly a good day for oil companies. We looked at gold. Aluminium. I think remember that from last week, that it was sort of hanging around. So for me, the big trend is up. Had quite a big sell-off from October. It's for me, it's a bit of a wait and see aluminium. If it can break out to new highs through 3,200, I think it looks interesting. If it gets knocked back towards 2.6, 2.7, it looks interesting. It's just sort of a bit in the middle for me at the moment. Aluminium. Newmont Gold Corp. Newmont Gold. I think we cover these. I've got a trade on Newmont. There we go. When did it do that one? Hang on a second. Newmont Gold. Oh, I've got September last year. So bought them at, where to buy them? 57.60. Let's have a look. Newmont. Again, it's not the most exciting stock in the world, is it? I mean, clearly, to an extent, it will track what's going on with the gold price. I would say that it looks like that downtrend from May into October is over. So I'd be happy to be a buyer of dips on Newmont. If I was a buyer today, the closest I'd want my stop is at $56. So it's not the most exciting thing in the world, but it is, it's trying to make a recovery since December of last year. So it looks positive, doesn't it? Oh, okay. Someone said about that French company we looked at, Orbea, the healthcare company. They've been caught treating elderly like garbage in France. Your words, not mine, allegedly. They're just a falling knife. Okay. AMC. No interest in AMC. I was surprised the other week, Gamestop was one of our top traded stocks. I mean, I'm amazed that people still trade this stuff, to be honest. The time to trade it was clearly last year. Not that I'm saying you're trading it, I want to ask the question. But it's just weak, isn't it? This is AMC, just weak. I think that game, that whole meme stock thing has been and gone. But I read Reddit, and I think there's a lot of people still hanging on, waiting for the next short squeeze. There's GameStop trading at just below $100. I just think they're just I would say personally for me, no reason to look at these stocks anymore. The story has happened in those. Robinhood, the broker who came to the market last year, and of course, very much a part of the whole the meme stock thing. For me, I wouldn't do anything yet. We had the trend has been down. All right, it's bounced back over the last week. It's still spent the last 6 months going down. So for me, it's not a buy for me personally. It's maybe interesting if we get a bit of a retest of $10 and it comes back, then perhaps if I absolutely had to buy it today, the closest I'd want my stop would be the other side of $9.75, which is $5 away from where we are now. So it's a 35-40% stop loss. you know, it's because the thing has fallen so much. So for me, it's an interesting one, I suppose. Another great story. You should take your profits when they're there. It's gone from almost $85 on the 4th of August to briefly below 10 last month. So yeah, I mean, you know, it has broken out of that downtrend, but it was getting to a point where it'd have to go up at some point. But does it plunge down again, and does it do nothing? You know, let's keep coming back to it. But I think early days for me in that break. We looked at natural gas. Shopify. I would be tempted to be a buyer. I think I would be tempted. Maybe we'll do it. Even though the trend has struggled. Or maybe I don't know. Hang on a second. Let's have a look. I've forgotten where all the buttons are. Where's trend line gone? Oh, there. Okay. Yeah, the trend, that was the trends, and it's gone. It's fallen out of it this year. Actually, maybe I should. No, I think it would be a bit of a gamble to buy it, because I would probably say no, that trend is down. So for me, it's interesting. I suppose if you really, really wanted to buy it, in terms of risk reward, it's interesting because I'd be a buyer at 876, but if it fell below 800, I'd be out. So my risk would be about $76 a share. And if the thing, you know, just bounces back to where it was at the beginning of the year, there's $400 upside there. So it's an interesting risk reward trade, but I'd probably say that the trend is still down in Shopify. Pretty volatile stock though, isn't it? $1,000 2 days ago, and then $800 yesterday. That is some volatility in Shopify. So I suppose, I mean, you know, it'd be quite an aggressive trade, but could be a buyer. But arguably that trend is still down. But that is an interesting one. We looked at natural gas. We did natural gas first of all. When we finish this live stream, you can go back and watch the live stream right from the start. And natural gas was one of the first markets that I looked at. Nokia we're looking at now is it Swedish or Swiss? No, it's Swedish, of course. Is it Swiss? I'm so stupid. Swedish krona or krone, whatever it is. I never know what they are. March 2020. So we're 2 years into this uptrend for Nokia. Maybe they're going to come back. They're going to come back and dominate the phone market again and destroy iPhone and Apple. Maybe wouldn't that be a great story for 2022? The great comeback of the Nokia 3360 or whatever it was. The trend is up, isn't it? So the trend in Nokia is up. I mean, it's accelerated away from that trend line since May. So I'd still be a buyer of dips. If I was a buyer now at 52 or 53, the closest I'd want my stop is at least the other side of 47.50. But that looks okay, doesn't it, Nokia? You know, looking at it, it's a bit strange trading in there, but yeah, the trend is still up. So I'd still be a buyer of dips. Could you explain what an ECN broker is? I can't really. I wouldn't worry about it, to be honest. Google it if you want to find more about it. But yeah, I don't use an ECN broker. I don't think I do anyway. I don't know. So no, Google that one. Can we have a look at ITX? What's ITX? Let's have a look at ITX. I don't know what it is actually. Can you tell me what it is? Because it's not that, is it? It's not the Italy 40, is it? Is it that one? It's not that one. Let me know. Let me know what the stock is, and I'll have a look at it. Can we look at PayPal? Yeah, I think PayPal was another one that's been really heavily hit, hasn't it? Whew. I mean, look at these. We'll take a look at what was the other one. Netflix was the one I was thinking of. So PayPal has gone from $300 in July to $124 today. I mean, I am absolutely amazed by, not so much in the likes of Peloton and Zoom, which were very much, pandemic stocks, but some of these bigger names, the Facebooks, the PayPals, Netflix, have been just absolutely murdered. Look at it. So PayPal is back to where it was in May of 2020. So quite incredible. And again, that trend is down. So for me, there'll be a buying opportunity at some point in the future, but it's not yet. I think it's interesting if we get back to pretty much where we are now. I suppose the highs before the pandemic really hit in March 2020, or hit markets, I should say. We're at 120, and 120 was a big level for PayPal. So it is interesting down here, but that is quite, it was at 120 back in July 2019. So it's quite an incredible move in PayPal, but that trend is still down. Let's take a look at Netflix while I mention Netflix, because that was another one that got hit hard. Look at that, it's right in its trend though. So there's the Netflix trend since 2016. I find it very hard not to be a buyer down here of Netflix. I think that's an interesting one for next week, Netflix. Again, it's had the, it's followed the market. We've had the run up this week. We've had it hit the last couple of days. Does it hold above 350? So for me, that could be an interesting one, Netflix for next week, because I would still say the big trend for Netflix is still up, even though the stock has halved pretty much, or did at its worst point, from its November highs. So that's an interesting one to watch for Netflix. You live in the UK and you don't know where Sweden is. I do know where Sweden is. I just struggled temporarily with the currency of Sweden and thought it was the Swiss franc, which of course it wouldn't be the Swiss franc because that's Switzerland. Bitcoin, we looked at Bitcoin. Inditex. There we go. What do they do? I sort of know those for some reason. Textiles, I thought they were. Retail, online distribution of clothing, footwear, accessories, and blah, blah, blah. Again, for me, I think it's a weird one, isn't it? It's a pretty sideways for a long time, but lots of volatility. I mean, big swings. What do you do? I mean, would you say? I would like, given that where they are now, that they have already fallen 20% from the highs, I'd be tempted to give them one last chance to see if it can hold above 24. So actually, it's had a big fall, but for me, 24 euros, I'm guessing it's priced in, or maybe Swedish francs or Swiss krona. 24 is the big level. I'd be watching next week, so watching to see if it's a bounce. But clearly, so much depends on stock markets at the moment. Let's have a quick dip into the S&P again, just see what these markets are doing. Maybe we'll have a quiet day after. Oh, it has bounced back actually a little. Maybe a quiet day after some of the craziness. Yeah, it's come back to where it was earlier this morning, the S&P. Cocoa. Haven't looked at this one for a while, have we? Cocoa, there we go. Let's have a look on the. Oh, I've got a feeling we've reached that point of the day. There we go, where my internet has decided it's had enough for the week, and it's going to slowly come to a halt. Here we go. Let's have a look. Let's have a look at the dailies. It's had some good trends, cocoa, and the big trend for cocoa going all the way back to 2017. So we're nearly 5 years into this now for cocoa. Big uptrend, and it has some smaller swings within that trend. I must admit, I've done a few trades on cocoa over the last 3 years, and they've done okay, but I think I struggled with it last year. So I don't know what I'd do at the moment. I think I'd be tempted. I'd probably want to be a buyer at some point because the big trend is up, but I'd rather wait and see if we got some weakness, because we can see that pretty much since February last year, 2,700 has been a real problem for the price of cocoa. So I just wonder if we're going to see it perhaps start to struggle again up here, cocoa. But the big trend is still up. I'd much rather be a buyer of the dips. Sugar, I haven't looked at sugar for a while. Sugar, I don't know if I said this. I think I might have said it the other week. But sugar, not Sugar UK. This has been my most profitable market over the last 3 years. I looked at the numbers in November, I think, and I couldn't believe it. I would have absolutely guessed it would have been the S&P. But the trades I've done on sugar, because of the trends, It has been a great market. I haven't traded it for a couple of months, but the big trend is up on sugar. For me, probably if I had to buy it now at 485, this is sugar UK, not sugar US. I'd put a stop loss at 460, would be the closest I want to stop. I'd probably rather see a bigger sell-off from where we are now to see what happens. But actually, it's a good example, this sugar, and if we take a look at cotton, why inflation is so high, and we know about the oil price, obviously, because all this stuff has gone up in price. Look at cotton. I know we looked at this the other week, but cotton a year ago was 76, and today it's 124. So the price of cotton is up 40% in a year, something like that. And that's a good example, actually, of a great trend, cotton. Still strong. The only question is, do you buy it now or do you wait for a dip? But cotton is I think it's a 10-year high for cotton. Yeah, 2011, June 2011 was the last time cotton was this high. So these commodity markets, this does show you why, one of the reasons why we're in the situation we are with inflation, because everything has gone up in price. I've got only less than 5 minutes left, so I need to get a little bit of a move on and get through stuff. Let's have a look at Grafton Group, somebody said. Grafton Group. What do they do? Is that a UK stock? Yeah. Publicly quoted building materials distributor operating in the UK. Okay. What do you think? I think, is it still up? I mean, again, I think it does show, actually, things are, a lot trickier now. We have been somewhat spoiled by the last 18 months by markets just going up every month. There's been lots of stuff that's been trending. It's definitely got a lot trickier over the last month. So for me, the question with Grafton would be, is it falling out that trend? I think, as I often say, I'm always willing to give stuff one last go. So if I was a buyer now, which I could be tempted to, I'd put my stop loss probably below $10.60. So that for me is the levels. Let's call it $10.50. £10.50. I'm getting confused with my currencies again. So again, if it slipped below £10.50, I think perhaps that trend is well and truly over, but it could be an interesting trade. I've just seen Snap. Wasn't Snap up a lot? Snapchat was up an absolute bucket load the other day. Am I getting confused? Yeah, it was. It went from $24 to $40 yesterday. Absolutely crazy, but well off from 80. Okay, we did that. We looked at gold. What is safe to trade this month? That is a very good question. I mean, for me, the interesting stuff to watch, I would say, I'm going to come back to it again, this dollar index. Because we have a trend that's been going since May of last year. So we are 9 months into that trend. That trend has held. There's some really obvious levels for stop losses. And there's a trend. It's still holding. So for me, looking for markets that are in trends. Oil is another one. It's, as much as I will say again, I think it's absolutely crazy. It's where it is, but it is where it is. And that trend is pretty clear. I've got a trade, I think I might have mentioned it last week, I've got a trade on my own account that I put on in oil here. So I bought at 83.5 with a stop loss down at 79. And I'm just trailing that stop up, where it is now. And I bought because the trend was up. So I think markets that have trends in, I think markets that are difficult to trade but can provide lots of entertainment, the likes of the S&P 500, because it is so volatile. But for me, the jury's still out as to whether we're going to see we're seeing a bottom there, or is there further to go. So for me, it's markets that have a definite trend. We did that trade on the pound, didn't we? I was slightly off on that, so we're losing a fiver on that. Bought that at 135.37. The market's a couple of points against me at the moment. There's another trade in there from somewhere. So for me, I think it's markets with good trends, and dollar index on the daily chart is one of those at the moment. So I do think that and oil is an interesting market to watch next week. And I'd still be a buyer of dips on those markets. Famous last words, let's see. Right, we've got to wrap things up there because it's 3:30. Again, to open an account, download our apps, open a demo account, go to Capital.com. Any questions after this, drop me an email, david.jones@Capital.com. @JonesTheMarkets is Twitter. To find out more about the training course I run, highly recommended. Go to @JonesTheMarkets and JonesTheMarkets.com, I should say. Follow Capital.com on YouTube, Twitter and Facebook. Will be out. I think we are doing one of the first videos we'll do next week on the channel is going to be on Meta on Facebook. So we'll take a look at those in a bit more detail. Hopefully the dust settles a bit today after some of the crazy moves we've seen in the last week. But we'll wrap things up there. Thanks for coming along. I do enjoy doing these things. It's always good fun to rattle through loads of these different markets and see what's happening and have a look at it. We'll come back and do it all again next week. So have a good weekend and good luck with your trading.